Hello everyone, welcome to Smart Investing with Philippe. So this is the time again for the market update, and today is a better day. So before we start to do the market update, please subscribe, smash the like button, and leave a comment to help me grow this community. I thank every single subscribers. I appreciate a lot that you are following me during this difficult time, but I'm sure that we're going to go through it, all of us, and we are going to be successful. And I'm going to give you few examples today of why you should never sell during a panic selling, and why it's always better to keep and hold through the crisis and through the sell-off very strong company with good fundamentals and good prospect in the future. So let's get into it. So let's start with the usual QQQ. QQQ today plus 2.61. Actually, we have rebounded from the low of yesterday of more or less almost 4% from the low of yesterday, which is actually very interesting. The volume is very low, as the sell-off was yesterday. But what we can say and what we can see is that we already have a dead cat bounce, because the cycle is this one. When you have a sharp crash, you have the bottom first, following the first leg, down leg, then you have a dead cat bounce, and usually you have some retracement. And after that retracement, if the market recovers slightly and continue to recover, then this is from where the bottom formation is going to happen and where the market is going to start to recover progressively to the upside. So it seems like we had this bottom at the level of 400. We rebounded by more or less 16-17%. Let's check it. Yeah, 16-17% is not a little, it's a huge dead cat bounce, and then we retrace back more or less. 50% of that dead cat bounce, and now it seems that the market wants to have some stability and who wants to not go much lower. What is also interesting to notice that the volume is extremely low. So although that we're seeing some bottoming formation and we're seeing some decreased volatility, we cannot say that we are out of the wood because the volume is not following the price movement. So, but it's normal, because when you have this type of crash, you have dead cat bounce, retracement, then you have a bit of upside, but the volume doesn't follow first. The volume follow after the price movement. So when we see volume picking up on the upside, that is a good sign that no institutional investor and big investor are starting to buy again. But hey, we have to take every good news as it comes. So then it's a good sign that we have rebounded from the lows of yesterday, and we should celebrate every single step from the recovery. So what we are seeing also is that IWM rebounded nicely by 2.61%. And you can see clearly also the bottoming formation from the peak of the VIX. I remember the one I told you when the peaks was at 60. This was spot on the bottom of the market here. And it's very unlikely, historically, there's never been a case after the dot-com bubble. So from 2002. Since 2002, there's never been a case where the market collapsed, then the VIX shoot up above 60, and after that the market will collapse and go much lower than the low of the peak of the VIX at above 60. Never had a case. So if we go much lower than this level here, then it will be the first time since the last 25 years that we will have that case. And I really doubt that this is going to happen. I think that the probability for this to happen is more or less 5%, 5, 6, 7%. So don't expect the market to go much lower than the bottom we had when the VIX was back at 60. Now the VIX obviously has a retrace back. We're going to see where it is. You see the VIX retrace back by 10% today, which is a good sign again. So the VIX stabilized around the level of 30, but still not going back to the level of 60. So if history holds well, the bottom of the market was on the 7th of April 2025. And it shouldn't go lower than the level of 7th of April 2025. So what is also interesting is that we have the S&P 500 also increasing by 2.45%. And you can see we are seeing exactly the same bottoming formation as for the Nasdaq and IWM. And you can see also the volume is extremely low compared to the sell-off we have seen in the past weeks. From the Max 7, we can see that the Max 7 rebounded by 3.17%. And it's quite a good news that the market rebounded by 3.17% on the Max 7. You can see also that the bottom, there is also a bottoming formation for the Max 7, and actually now the discount for the Max 7 is more or less close to 30%, you know, from the high, which is an extreme discount from the height of December last year. Yeah, we are talking about 30% discount, more or less, give or take. It's an extremely good opportunity to start to build a position in Max 7 or to top up your existing position. I mean, definitely this will be very bad if you miss that opportunity. When I want to tell you an example why you should never sell when the market is crashing, because you will never recover and you will not enjoy the rebound after the crash, is Netflix is a very, very good example, you know. Netflix had a very good earning, beat expectation, earnings surprised by 20%, on sales by 0.36%, guidance were really strong. And you see from the bottom, actually it was a very school case, you know, it just collapsed back to the 200 moving average, and after that rebounded straight away to all-time high. And it rebounded by 29% since the 7th of April, which is exactly the peak of the VIX. You see, there's no need to talk about this forever. This has always been the case. Market bottom at the peak of the VIX. Check back all the crises after the 2020 to the 2002 dot-com crash. Don't take the dot-com crash, because the dot-com crash was an exception. But if you take all the collapse after the dot-com crash, then you will see it's always all true. Check the data. Ask AI to check the data for you. You will see. There is no exception to that. So if it happened this time, then we will be in an extremely, extremely unusual time. And I don't think this will happen. It will require a big exogenous shock for the market to go much lower than the VIX peak on the 7th of April. That's my take. And I think the probability and history is on our side. AMD, holding well the bottom. Also, you have a bottoming formation. Palantir, extremely well, you know, Palantir. Despite all the negativity and so on, and despite that it's fairly overvalued, it's still holding really well. SMCI, 3.63 up, good. I mean, Bitcoin also very much up, like 5% almost today. Retracing back, I mean, pushing up to the above the 200 moving average, which is a good sign. Push back a very strong resistance level, the 200 moving average, pass back to this, and you can see the RSI is getting above 50, which is very bullish. I mean, this is like a very good setup for Bitcoin. You see the market sell off at 74, now at 91. Again, if you panic sell, you would miss a rally of 22% in just few days. So don't panic sell, you know. That's the biggest mistake you can do, especially if you are holding very strong indexes and very strong companies. Just ride it through. And it's very good for your psyche also, because it makes you stronger. It teaches you how to go through crisis and through market collapse. It helps you to become a better investor. And for the next time there will be a market crash, you will be more in control, and you can actually start to invest during the market crash when everyone is running away, everyone gets scared. You are the one who are keeping cool because you have the knowledge of what is happening when there is a market crash. It's probably the biggest lesson you can learn. Don't panic sell, go through the market crash, go through the other side, and you will be happy and you will be rewarded for doing so. But again, the caveat is you need to be invested in strong companies with strong fundamentals or into indexes. TLT slightly up, but nothing major, still at the bottom, so the market's still not expecting the rate to decrease, the Fed to decrease rate anytime soon. VIX, we already talked about it. I mean, it's a good day overall. Nothing exceptional, but a good day. So now if we go to the economic calendar, nothing very special happened today. Richmond Manufacturing Index minus 13, manufacturing shipment minus 17, Richmond Fed Services Revenue. I mean, nothing very interesting today in terms of economic data. But what we had few earnings report today, and today earnings report were broadly positive. Equifax and Invesco beat expectations, showing that core sectors of the economy like credit and asset management remain very strong. No earning disaster hit the market today, and that helped the S&P 500, the QQQ and IWM to hold and even extend yesterday again despite lingering tariff fear. What you can see is that Netflix beat all expectation, revenue higher than expected, subscriber growth, market beat. They added most new subscribers than Wall Street expected, both in the US and internationally. Advertising tier, they also grow that segment. Guidance issue a strong guidance for Q2 2025, confidence about new content release and global expansion. And actually Netflix gap up heavily after hours, trading back to near all-time high. So you see, we had a rebound from the 200 moving average to again to all-time high. I mean, these are clear signs we are not in a very, very severe market crash, because otherwise you wouldn't never see Netflix going to all-time high again. And I think during the earnings seasons for the Max 7 and so on, maybe they will give some guidance better than expected. You will see them rocket it back to all-time high, you know. And I hope this is what will happen, you know. So let's look at the headline. Headline very positive today again. Stock rebound as trader bets on tariff progress. US inflation path depend on corporate America tariff response. Big tech deep buyers vanish in the market with earnings ahead. Gold slide from 3,500 on profit booking after rally to record. All the fear about the dollar being reserve currency or losing the reserve currency status is like, this is a joke, you know. But anyway, this is what happens sometimes in the markets, you know. What we have also news, we have news from the Donald Trump government that they are going to negotiate with China, and this is very positive for the market because stock rebound as trader bet on tariff progress. If you look at the headline on Bloomberg, you can see Besant expect tariff standoff with China to de-escalate. Stock rebound as trader bet on tariff progress. You see all the headline very positive, you know. There's still a lot of reluctance because people would think that there is another cat bounce, you know. But usually you have a sharp correction, a strong cat bounce, then a retracement, then after that the market starts to recover slowly but surely. Having a two cat bounce and going lower than the peak of the VIX, again, I repeat, it's never happened since 2002. The last time it happened was during the dot-com crash. The dot-com crash is a crash that lasted for 3 years and took another 3 or 4 years to recover. So you're not talking about the same beast. Don't make parallel to the dot-com crash. We are not at the same situation as the dot-com crash. We are not even at the same situation as the global financial crisis. We're not even the same situation of uncertainty like the COVID crisis. So, you know, all is driven by fear. All is driven by fear. Having said that, thanks so much for thanks so much for watching the market update. So I'm traveling, that's why I'm in a different setup. I rented Airbnb, but I will be back at home. And as usual, as of the routine, you know that we have every day we go to the market update, we make a summary, we stay very disciplined, we don't lose control, we stay focused on the long-term investment thesis, and we go through each crisis and each collapse, and we take opportunity to buy very strong fundamental company. So thanks so much. Subscribe, like, and leave a comment. Have a good evening. Bye.